All right, fellas, welcome. Weekly DeFi finds. Maybe in the future, once we have more people on board, once DeFi House project matures a bit, we will make these things live so people can join at a set date, all into one room. Um, on Zoom or Google Meets, doesn't matter, and just have it live conversation, discussion, me walking through some interesting information, and then simply having some discussions, Q&A, whatever. But for now, when we are just getting started, DeFi House is getting started, everything, I want to go ahead and make it myself and post it as a separate video. So weekly DeFi finds is simply end of week review, what happened in the market, what's happening still, what kind of things we had, what kind of things we can expect, and it's just my personal thoughts. It is not in any way or form some sort of a recommendations. It's just my thought process. It's a very chill, relaxed approach. You can listen, watch, and just have it as a background thing. And yeah, it's just my personal opinion about markets in general. So I will start on a DeFi House investor dashboard that is currently like that. As we grow, we will of course improve it, and we also are developing a liquidity provision management system so you can um, enter your liquidity provision positions and see the history, your profit, your loss, your everything. I mean, as a position manager, because DeFi lacks that, but that's gonna be for the future. So it's Friday, of course. The quote of the day, maybe even of the week: the market can remain irrational longer than you can remain solvent. And this is a very good quote, especially these days when the market is bleeding, it's melting, and the majority of people starts to kind of get scared a bit, reactive. But there is no need because, well, it's normal. Plus, it's the end of September, just before the Q4 starts, and they need you out. They need you out. The market maker needs you out. That's why record breaking amounts are being liquidated on a pretty much daily basis now, in longs, in leveraged longs. And of course, the Binance is a big player here. It's a very manipulative exchange. They don't care about you. They care about making profit, and they are selling their own tokens to liquidate leveraged positions, and it's a pretty transparent thing. You can see how many different coins Binance is actually selling using some of the software, and that's why I hate the anything that CJ, the ex CEO of Binance, shields or tells. In my opinion, he's just another scammer, and some people may call him crypto god, whatever. But in my opinion, he's just a pretty disappointing guy in the space. Very misleading. So let's begin. I do have some X or Twitter posts ready. I'm gonna comment them. I'm gonna see what's gonna happen. But before news related stuff, let's take a look at some metrics. So from the news side, the headlines today buzzing, well, mostly on just market crash and what's like happening directly. Some, I mean, crypto related news, but not necessarily that something is extremely bad happening or something good happening. It's just some sort of a media post that involves the word crypto or sector as crypto. Yeah, so the media narrative is pretty neutral. Nobody's covering major crashes in crypto, even though we had a pretty big impact. We dropped on most assets more than 20%. Nobody cares. Media does not care. And it's just because it's just a normal procedure, end of September, pretty much all the time. So Um, on the headlines, we have some posts. Crypto needs dual wallet management, AI monitoring for North Korean hackers doesn't matter. $1 registration fee from US diversity doesn't matter. South Korean act doesn't matter. Bitcoin loses 1,000 millionaires a day since start of the week. It's pretty good statistics, right? Because Bitcoin is just melting as well. It's barely holding that 100K price point at this rate, right? Um, ASTER compensate traders after whatever, doesn't matter. ASTER doesn't matter at all. Ethereum priced at crossroads, that's key support, doesn't matter. Support resistance stuff is just complete garbage. So fear and greed index, we are now entering into the fear state as of today. Yesterday we've been at neutral still, so it's a pretty good sign that people are panicking, right? The retail is panicking. Those that been holding a lot of leverage position panicking. They're getting liquidated left, right, and center in circles and spinning around. People are losing their mind. Um, it's normal. So at the fear index, when we have fear, it's time to accumulate. Accumulation can happen in multiple ways. You can just buy some spot, you can DCA, or use DeFi liquidity pools to execute into your positions. I showed you how to do that inside the platform. My approach is pretty neutral. I allocated Solanas yesterday into the LP and made pretty much not zero downside range and a lot of upside range. I did that so I can get out of Solana as it reaches the previous high, and then we will see how it reacts. Ethereum position is still in and out, in and out. Of range is really, really messy, but I'm not rebalancing too much because I mean, it's just let it be. A SUI position, long-term position is in range and it's gonna be in range. It's been in range for 6 months, so almost seven. The smaller range position is at the very peak of the bottom range limit, so it's kind of in and out, in and out. Nothing to worry about. I do believe that we're gonna have this whole dip pull board back up fairly soon, so I'm not rebalancing anything as of now. um other positions other positions in fXRP is in range. I'm just playing around with that. Next week I'm gonna increase those positions massively, and then yeah, these are like the majors, and I will start covering, showing a bit more and more as we go on a daily basis, more or less. I'm not explaining everything just not to overcrowd you, but yeah, it's just a lot of happening in DeFi these days. So let's take a look at some of the metrics. So Bitcoin dominance, which is a pretty interesting thing, is currently sitting at 59. But if we take a look at the candlestick patterns, and yesterday we had an increase of 0.72% in Bitcoin dominance. uh, this thing alone doesn't matter. What matter is that if we take a look at USDT dominance, and on a candlestick chart yesterday we had pretty much 5% increase in dominance in USDT, meaning that people are not rotating any capital from crypto to crypto or from alts to Bitcoin, whatever. They are actually selling their crypto to USDT, to stable coins. And I believe if we open up USDC dominance as well, we saw also 4.4% increase in dominance on USDC. The reason why we look at USDT mostly because it holds bigger dominance in general. So 4%, pretty much 5% increase in USDT dominance. It's simply, and very low increase in Bitcoin dominance shows that people are actually selling back towards USDT, and this is retail panicking. So it's a normal procedure, but it would be a bit different if you would see um, from all coins money moving back to Bitcoin. Then it will signal another thing. But now, because we are seeing a sharp drop in most of the assets, right? Even the biggest ones, especially ETH lost quite a bit over the last few days, and we're seeing increase in USDT dominance, meaning that people are actually selling their assets. So it's just usually retail just panicking. If we look at ETH BTC ratio on, you will notice that we can look at like that ETH used to outperform BTC for quite a while now, pretty much since mid-April, and now over the last good few days, and even not even few days, like a month or so, it's once again decreasing, meaning that Bitcoin is outperforming Ethereum. So uh, yeah, I mean, it's a completely normal reversal sign after this whole big uh, impulsive move to the upside from general market structure perspective. Yeah, so this shit can go up, it will pull back. I still think we are not even close to being done in terms of the upside movement. I still think Ethereum will easily break 5k over the next quarter. I mean, easily, in my opinion. I don't know, it's just from my experience in the markets. I could be totally wrong and we can melt to zero in the next 5 minutes. But it's just my opinion that we are far from being at the top. We just need people out right now before the Q4, when more monetary policy change is gonna come into effect, and institutions need to get in at better prices. That's why all of the leverage positions are being washed out. All the retails is trying to be washed out. It's just a normal procedure before next leg to the upside, in my opinion. So all of these pullbacks are natural. If we look at DeFi TVL, actually there is not much change. Yes, we saw a bit of a decrease, but we are still within the same framework that we've been since mid-August, pretty much. So peaking at 145 and dropping towards 118 billion dollars worth of assets locked across the whole DeFi in general. So there is nothing bad about that. We saw a bit of a sharper declines on recently, like minus 8 billion yesterday, minus 7 billion on 22nd of April, September, sorry, April. Um, so yeah, but these moments actually generate very high yields across chains, especially Solana. So we are farming very good yield on Solana and other chains as well. Solana has been incredible these last few days and weeks, to be honest, generating on average 0.5% daily with a pretty wide range. So it's good to accumulate fees at a lower price. Yes, we do have a hanging impermanent loss, more or less, but because we're so long anyway, it doesn't matter, and we definitely believe that it's not done, and the next leg up is going to happen. That's why holding the position and just accumulating the fees at a better sol prices makes sense. If we would change our opinion about Solana and market in general, that it's going to melt and bear market is going to start, then we would act accordingly using the hedging strategies. But for the moment, there is no need to panic. Altcoin market in general, BTC dominance kind of where it was, and on the total free, which is all coins market except top 10 of cryptos, there we see a bit of a stronger decline from 1.16 trillion to pretty much 1 trillion. So it's a bit of a more sharper decline, I would say. But once again, nothing to worry about. And total market cap also is seeing a pretty healthy drop, but still within the range, still within the structure. If we move way beyond 3.5, then it could be a bit of a trouble. And if it's for a short-term perspective, like a quick dip and back, it's not too bad. It's normal. But if we move beyond 3.5 aggressively and stay there, then it's time to think about the market conditions in general. But for now, we can't assume. We can only see what's happening right now, and right now we are still within reach. It's all normal seeing how many people are getting liquidated and what kind of amounts are getting liquidated, right? If we even see the real-time liquidations on Ranger Finance, we can see that across DEXs. This does not include the centralized exchanges. Across DEXs in 24 hours. Look, longs are dominating all the way 350 million more or less being liquidated against 30 million in shorts, meaning that people are extremely overexposed in longs, leveraged longs, and just when you have such a big disbalance between longs and shorts on a leverage side, you will get these liquidation events always. It's always going to happen, always. And as you can see, real time liquidations, a lot of them happening on Solana, a lot of them, a lot, right? So yeah, and most of them happen, of course, on Hyperliquid. Very closest drift, and then a few other. So these are from the Solana perspective. 24 hour, yeah, 24 hours platforms. Oh yeah, and Jupiter is also crazy. It's crazy. Okay, that's that. We can also take a look at. We don't actually need to look at that. We can just check. Yeah, on stable coins, we are hitting all-time high after all-time high in issuance, so to speak. So as you can see, still over the last 7 days, plus 1.36% in stablecoins market cap increased, which is plus 4 billion, and is just all-time high after all-time high. So stablecoins are definitely booming, and we are now sitting just under 300 bills in market cap, and I do believe we're going to see a massive inflow to stablecoins market, and also stablecoin market meaning opportunities across different chains. There are many of them as we speak. Actually, I've just thought I'm not sharing them on DeFi House yet because I don't want to overcrowd people with a bunch of information. So people join and see a million different posts and videos and they have no idea how to structurize it. And because we are still figuring everything out ourselves on the structure of the things, the strategies, budgets, everything. I mean, what kind of information people need, we gathering the feedback. That's why I'm not really too much like sharing all of those opportunities in stables, volatile, extremely volatile, degen pools, whatever it may be, right? So just bear with us. We are also establishing everything as you are as well, gaining trust in us, etc., etc. Okay, so yeah, that's it from this perspective. Now we can start looking at some of the X posts. Of course, I will mention fXRP because that's a big thing for me, because as you know, I am very heavily into XRP since 2016, mid 2016, because I saw the 2017 run towards the all-time highs. I accumulated ever since on a regular basis, so to speak. But it's like a generational investment from my perspective. Some people invested in BTC for the generational investment. I just more likely to believe in XRP rather than BTC. I'm not against it, but it's just my personal preference after lots of research, meeting people, seeing what's happening, seeing why it's happening, etc., etc. It's just my opinion. So, but I mean, what I wanted to mention here is that fXRP, this flare thing is really, really big deal because fXRP is minted, so to speak, using decentralized matter, meaning that currently, yes, you can still get some sort of an exposure to XRP DeFi, not necessarily DeFi, but to XRP loans or yield opportunities, but those comes from a centralized entity. This could be centralized exchange offering you XRP loans. This could be Nexo, for example, offering you XRP yield by holding it. This could be MXRP on XRPL, but still it's a centralized entity, the MXRP issuer. And Flare been under development for so many years, and they launched this F assets that is actually based on a decentralized matter, and that's why it's such a big thing. And all of the limits, the caps, everything were reached very, very quickly within 4 hours, and basically it's just a new era for years to come for this whole Flare chain network and XRP opportunities. And it's not even accounting for institutional interest as well, that is within the hundreds of millions waiting to redeem and mint fXRP as well. So by now, if you minted some fXRP, you have ability to use a kinetic markets and basically lend your fXRP and borrow against it. I did a video about that. The limits were reached. There was no available USDT to borrow, which also signifies a very good thing about the demand and interest in this product. Also, you can add liquidity to fXRP USDT zero pools on SparkDex, as we have already did. Also, Blaze Swap Dex and Analysis Global. SparkDex AI for me gave the best UI experience, because you have to also understand that on Flare these DeFi protocols are fairly new and pretty, they never had attention as they have right now. So I believe the UI, everything is gonna change for them as we speak. They're gonna develop better features, better functions, faster responses, everything, because now they look like Uniswap back at like within the last 4 years or so. They're pretty bad looking protocols, but at least we have something. And next for fXRP is of course going to be collateral for CDPs, and also liquid staking XRP via Fireflight, which will also generate you yield, and you will be able to use staked XRP on Flare across DeFi as well, borrow against it, etc. So it's just the first beginning steps. Wall Street Bets, also a fairly big channel, known channel for memes and all of that stuff. Also posted the Gray DeFi expansion continues, of course. First it was just ETH, now XRP is getting liquid staking. The attack surface is growing exponentially, and with it the opportunity, let's fucking go. Of course, it's nothing to do with just overall concept, but DeFi is getting more attention. Before, we used to be just a few people speaking about it, but now more and more people are stepping into this whole thing, and definitely it's a good thing to hear. And I believe that the future is on chain as well, not necessarily with monetary policies and CBDCs, all of that stuff that's going to be implemented towards 2030, but still on chain opportunities is going to be massive moving forward. We can close on this. Also, I mean, speaking about the Aster, is just another KOL bullshit. And yeah, we all saw that Mr. Beast wallet bought some Aster. Then Mr. Beast closed his Aster position for a loss of $20,000. It's just some of the posts. But it's generally a thing where it's just a controlled manipulation. Nobody cares about those 20K, especially people like him. And I don't believe that it's actually him. I believe it's just a team behind it, so to speak, being bought and presented. And it's just, I mean, that's why I hate projects like that, where CJ and other nonsense KOLs are actually big names, so to speak. What does Mr. Beast has to do with crypto, especially Aster, which is a technical coin, decentralized perpetual futures position? It's just a massive nonsense, So that's why I hate people like that, especially CJ. On Binance, shilling these things, building, when most of that stuff is clearly weird. It's clearly weird. Next, Project Zero. This is the protocol that I will make a separate video next month, because they are just getting started. But this is a very cool protocol, and I want to be here explaining this to you. But I will make a separate video inside the platform that is going to be explaining it all. Basically, what I wanted to show you is, I mean, the first idea behind it. And the idea behind it is that, for example, you might actually have capital deployed on Solana across different protocols. So you might actually be supplied some Solana on Camino. You might be supplying some Solana on Drift protocol. You might be supplying some Coinbase Wrap BTC on Solana on Camino as well. You might be actually lending some Solanas or USDT, whatever, on Jupiter. Basically, if you have capital um, um, in multiple DeFi protocols on Solana, this Project Zero is going to combine it all and let you borrow against your whole DeFi portfolio. So this is an amazing thing. So if you have for example, 100 in Camino, 100 in Drift, and 100 in Jupiter, as an example, 300 total across 3 different protocols, your portfolio, this whole amount on Project X will be taken into consideration, and you will be able to actually get borrowing limits from the whole $300 in between all of your protocols across different chains. The reason why I'm not showing this yet is because it's not fully functioning. They opened a Project Zero their own vaults as for now, and Camino is in audit. Adrift is in audit live early November. Jupiter as well, and Camino is live on October 8th. So that's why the next month I will make a video showing you how it works, etc. But this is a very good thing. And they also have point systems, so most likely you're going to have an airdrop or something. But this is what I like. This innovation, this kind of protocols, I really love seeing being built. If we look at overall chains, what's happening in between the whole DeFi sector on separate chains, over the last month and week, a lot of TVL is leaving DeFi, as you saw on that total TVL DeFi chart. The TVL is kind of dropping from ETH, from Solana a bit. People are changing back to USD, back to stable coins. They're panicking over the last week. Over the month is not too bad. Ethereum lost more. Makes sense because it's there is not much going on apart being a massive whale holding asset in Aave. A BCC, Bitcoin Smart Chain, of course, saw a bit of inflows as well. Base is pretty neutral over the month. Is amazing to see that money is not flowing out. Over the week, it makes sense because, well, people are panicking. Hyperliquid, don't even want to talk about this. Avalanche saw a very high increase in volumes, and price as well reflected that. And Avalanche is definitely the chain to watch. I will make a separate video in the platform very soon about Avalanche and DeFi opportunities on Avalanche, because there are many and they are growing fast. I do have some Avalanche available on Aave and on my private wallets. I will transfer that over, and I believe I will allocate into the DeFi pools already, because the yield is worth me holding there rather than just on a cold storage and Hortway wallets. So Avalanche is getting the attention over the month. It's one of the few chains that saw from a big chains, saw an surplus inflow. And over the last week, of course, it makes sense because everything is going down. Aptos ecosystem is also seeing a bit of an increase, which is good to see. And a SEI blockchain is also actually fairly interesting because they are getting a fairly decent amount of attention on a SEI chain itself. It grew from, I would say, the interesting points were about from here, mid-August. It peaked all the way to 700 million, more or less, so near a billion in TVL. And the reason why it catched my eye, because I was looking at the stablecoins perspective, from a stablecoins matter, and stablecoins on say been showing a big increase. So I went to say protocol at Takara Land, which is like the native on say, and you can see that on Takara Land, it is offering you for USDC deposits right now up to 21% in API. So the base is 11, which is still a lot, and then in wrapped say rewards another 9, pretty much 10%. So you're getting a 21% API, uh, including the rewards for supplying USDC, and USDC on Say chain, which is as they all claim to be the fastest layer one, whatever it may be, doesn't matter. But USDC is a native USDC on Takara, so this is not some sort of a wrapped USDC or whatever. This is native USDC, so you can definitely get a good stuff on USDT and USDC as well if you bring your money to Say, just for stable coins, because Say itself, I don't know much about it, and it's volatile. It's not the place to be extremely exposed to, especially when the market is so unstable. But for stablecoin, just to keep your money here for a bit, while these of course will go down over time, but a lot of USDT is supplied, a lot of it is borrowed as well. Not fairly similar with USDC as well. So it's something that is worth taking a look. And if you have some USDC parked somewhere, you can definitely transfer them here, hold it for a while, get those yields in, and then just simply withdraw and transfer to another chain again. So this is Takara and Say related stuff. My laptop is dying, so let's make it quick, right? Yeah, but we have just two things. So overall speaking, all of those chains, most of them are not interesting, but the top ones are seeing a fairly decent uh, sustainability over the month. Over the last few days, it makes sense it's down because people are scared, and are selling their assets. But Base, Avalanche, say, Aptos ecosystems are fairly interesting, especially Avalanche as well. Um, Definitely interesting. Also, we have ZFI, whatever it's called, ZFI or something. 2.0 version or something is being developed, as far as I understood. And this protocol is cool because it lets you get DeFi opportunities across multiple chains. So this is a very cool protocol. So basically, it's finding opportunities for you across 43 pools and 10 protocols on Base, Arbitrum, and something else. And it's basically finding those opportunities for you, so you can deploy capital into the protocol itself and yield, and the protocol will yield, find the best things for you. I'm not the biggest fan of these because the APIs are usually much lower than I can make myself. But if you're lazy and or have millions in capital and you want to allocate and just don't care about management, whatever, then it could be good for you. But basically, you can find opportunities based Arbitrum, for example, also Sonic Chain, and some of the protocols that they have. They will find different pools for you and basically allocate capital there. So it's good, but I'm interested what's gonna be their this latest announcement on Money 2.0 automated. So this could be something interesting, maybe even more chains or something. So we will see. But it's a protocol that is worth looking at and worth following. So I think that's it for this first episode. Half an hour video, pretty good. Gave you some of my ideas, thought process. I would love to see your comments. I would like to see what kind of things you would like to hear more. Of course, I know that you want to see actual DeFi strategies, money making strategies, and I am slowly gonna introduce that because I have a million and one things going on in my head as well. I'm just trying because I've never done anything like that, like educational stuff, content, everything. I just used to chill, just harvest yield, participate in DeFi, and that's it for a few years now. but I just saw that people are interested, people are asking, and when I moved to Marbella, more people here are also interested in that thing. So I'm like, let's try to do something, and it's just a new thing for me as well. So thanks for your patience, and all the feedback is needed on what you would like to see. Of course, the strategies, the actual strategies, DeFi step by step, do this and this to get this yield and that is coming. Don't worry. It's just takes some time to set up, and I don't want to be creating and uploading everything at once. I want to implement these things step by step as we grow, as platform grow, as community grow, as people grow. Okay. So, so simply bear with us. So yeah, thank you for watching. Hopefully it's been beneficial. And of course, as always, I will see you on a next video. And if you have any questions, feel free to message me on Instagram, or if you are inside DeFi House, message me in the platform as a private message. Take care.